Investment giant Blackstone Group has made a $6.2 billion offer for Australian casino operator Crown Resorts. That's its third offer for the troubled firm, with the news pushing Crown shares 17% higher. The revised bid puts Blackstone in pole position to win the takeover race. Rival bidder Star Entertainment has backed off, citing regulatory worries. Crown, too, still faces its own problems. Those include a federal probe and a public inquiry over governance and anti-money laundering controls at its second biggest earning casino. The company has acknowledged that it failed to prevent criminal transactions. Having favoured the bid by Star, Crown now says it will weigh up the new Blackstone offer.
A new milestone for the Nasdaq. The index topped the 16,000 mark for the first time Friday as declining bond yields pumped up tech stocks. But the Dow fell for the fourth time this week. Fears of new lockdowns in Europe to curb a resurgence of COVID-19 cases drove down banking, energy, and airline stocks, pushing the S&P 500 into the red as well. Falling oil prices dragged down energy stocks. Investors instead sought safety in bonds, driving down yields, which in turn pressured financial stocks. Mercadian Asset Management President Ken Kamen.
Well, the markets are dealing with this close down now in Austria and the COVID news that Germany might be following suit. So, the market has gotten used to COVID to some extent, but not that used to it that it won't react. So I think that we're getting a little bit of market jitters here.
The Dow fell 0.75%. The S&P edged down 0.1%, but the Nasdaq added 0.4%. The latter two indexes gained ground on the week. Investors pummeled shares of Foot Locker. The athletic retailer said supply chain constraints will persist into early next year due to shipping bottlenecks and manufacturing delays. Intuit was the top gainer on the S&P. Analysts lifted their price targets on the tax software company after it beat quarterly estimates and raised forecasts.
Irish discount airline Ryanair has confirmed it will drop its London Stock Exchange listing next month. It said the volume of trading did not justify the costs related to retaining an additional listing. The company cited falling trading volumes when it first announced the plan earlier this month. It deals a blow to London's status as a global financial centre after Brexit. The move comes after Ryanair's British shareholders' voting rights were restricted following the UK's EU departure, and followed minor BHP saying in August it would do away with its dual-listed structure. Ryanair chief executive Michael O'Leary said last month that Brexit had pushed EU stock ownership of the company below 50%, adding that the European Commission wanted it, quote, to be seen to be taking action. Ryanair said it will continue to hold a primary listing on Euronext Dublin, and that the last day of trading of its shares on the LSE would be December 17th.
New concerns about the Boeing 787 Dreamliner passenger jet emerged on Friday. Leaders of a subcommittee in the U.S. House of Representatives have called for a government review of the Federal Aviation Administration's oversight of the Boeing plane. Lawmakers noted numerous production issues that have halted deliveries for lengthy periods over the last 13 months. Leaders of the U.S. House Transportation and Infrastructure Committee want answers on how the FAA is overseeing the process. Word of stepped-up scrutiny further pushed shares of Boeing lower. The stock was already under pressure after the Wall Street Journal reported Friday that Boeing had once again cut back on production. Boeing says that it is, quote, completing comprehensive inspections across 787 production and within the supply chain while holding detailed, transparent discussions with the FAA, suppliers, and our customers. It also said production is ongoing, but inspections and rework efforts are impacting deliveries. Boeing admitted last month that some titanium parts on the 787 were made incorrectly over the past 3 years. That was just one of many problems that have caused it to cut production and halt deliveries since May. The FAA stepped in July and ordered Boeing to fix a manufacturing quality issue near the nose of the plane before making customer deliveries. Shares of Boeing were down nearly 6% in late Friday trading.